Perfect. All right, so I think we'll be able to start now. Thank you so much for joining us on this webinar about our last ICT campaign. I'm Noémie. I'm from the sales team at Carbon4 Finance, and I'm here today with Charles.
Hello, everyone. I'm Charles. I'm an analyst at Carbon4 Finance also. I've been working on the ICT.
I think we should stay on one mic just for. No, yeah, sorry. I think people will be able to hear you if you take where you're at just for the presentation. If you take this mic. No, I think you can stay on mine just for now. And okay. Sorry, we're setting up the mic for you to not have the echo. I think you'll be able to hear Charlie if he speaks because he's just by my side. So I think that should be okay.
Yes, apologize for the technical difficulties. Let's start back over. Okay. So my name is Charles Dowlat. I'm an analyst at Carbon4 Finance. I've been working on the transition risk of the ICT sector, the digital industries, for 2 years now. And recently we've published, as you may know, an analysis of where is the transition risk of the ICT sector. So I'm going to present the results of this publication in the seminar.
Yeah, thank you, Charles. We'll have plenty of time for questions after the presentation, but feel free to use the discussing option of the Zoom in order to be able to address your questions, and we'll read them out loud and we'll answer them after the presentation. So first, I'm going to do a very brief overview of who we are at Carbon4 Finance and what we do, and then I'll leave Charles present you the main outcomes of the ICT campaign of Carbon4 Finance. So Carbon4 Finance is the climate and biodiversity data provider of the group Carbon4. The group Carbon4 was actually created a bit more than 15 years ago by an economist and Jean-Marc Jancovici, who you may know for being the founder of the carbon footprinting method. Initially, Carbon4 was a consulting company who was doing carbon footprinting for the companies of the CAC 40, but then slowly but surely we hopped on to more strategic issues, and we kind of helped companies in order to help them build new strategies that would take into account the climate and biodiversity risks. In 2016, some financial institutions, mainly Mirova and Euronext, asked us if we would be able to provide them with climate data in order to follow the transition risks of the company that they were covering. And this is how Carbon4 Finance was born within the group Carbon4. Today at Carbon4 Finance, we have 3 main databases. The first one is called CIA. It's a database on transition risks, and it's actually the one that we're going to focus on today. Within the CIA database, you can find every data relating to carbon. So it's carbon footprint, it's scope 1, scope 2, scope 3, upstream and downstream data on emission savings and on emissions induced, and everything related to temperature alignment of the portfolios as well. We also have a database called CRIS. It's on physical risks. And then our third database is called BIA-GBS. It's a database that we co-created with CDC Biodiversité. And this is about everything related to biodiversity impacts and dependencies. What makes us very special at Carbon4 Finance is that we have a methodology that we call bottom-up, which actually means that we go back to the public documentation of the companies that we cover in order to collect physical volumes of sales that we then multiply by emission factors in order to systematically recalculate the scope 1, the scope 2, and the scope 3 upstream and downstream of the companies that we cover. If we take an example, if we take Toyota, for example, what the team of analysts, it says 25 on the slide, but today it's actually a bit more than 30 analysts. They're going to open the annual report of Toyota for the year of analysis, and they're going to collect the volume of sales for, let's say, hybrid, thermic, diesel vehicles, et cetera, and then they're going to multiply the volumes of sales by the emission factor that fits. So now we're able to have a different value for a hybrid car that runs in France or a hybrid car that runs in China, et cetera, because we have emission factors that we produce in-house and that are very, very specific. From this bottom-up methodology, we're able to extrapolate and we're able to cover today all of the main indices. All of the methodologies that we create, be it CIA, CRIS, or BIA-GBS, we create them in partnership with a structure that is very close to corporate realities. So for our climate databases, for CIA and CRIS, we actually had the expertise within the Carbon4 group of climate, and we actually co-created those methodologies with the consulting side of Carbon4. For the biodiversity database, we actually did not have the expertise within the Carbon4 group to be able to create the most robust scientific methodology that we could on biodiversity. So we looked for the actor in the market that would be able to kind of help us create the best possible biodiversity data set. And this was Steadily Biodiversité. Steadily Biodiversité also actually has roughly 15 years of experience with biodiversity. So together we have 30 years of experience on climate and biodiversity topics. We are quite aware that our methodologies there are lots of questions that may arise from our methodologies, and this is the reason why we have an ambassador program whereby all of our clients have internally one or two, or it could be more, but usually it's 2 ambassadors that are responsible for gathering all of the questions that employees internally have. And then those 2 ambassadors have a direct link to the research team. So every analyst, such as Charles, is responsible for a certain amount of clients, and those clients can ask any questions they have to the research team directly in order for you to be able to have the most precise answer possible. In terms of who our clients are, we work with various types of financial institutions. We work with asset managers such as Mirova and Condriam. We work with asset owners such as Maif and AXA. We work with banks as well. We work with universities and index providers such as Euronext. And since 2021, we were actually selected to be the official data provider of the Eurosystem. So all of the European central banks work on climate with Carbon4 data. As far as biodiversity is concerned, we also work with asset managers, asset owners. We work with French clients such as Amundi and other clients who are more international, such as ING. And then in terms of our coverage, so as I said, we cover main indices, the main international indices. And then in terms of assets, we cover listed and non-listed assets. We cover, of course, corporates, we cover bonds, sovereign, and we have a specific methodology for both sovereigns and green bonds. We cover loans. And then with methodologies developed on the Carbon4 consulting side, we also are able to analyze private equity, real estate, and infrastructure. So this is it for the overview of Carbon4 Finance. And then now I'll leave Charles present you the main outcomes of the last ICT campaign. Sorry, we'll just change the mic really quickly so you're able to hear Charles as best as possible. J'arrive pas à enlever mon micro. Enfin, je vois plus l'option pour enlever le micro. Mais ça paraît pas les...
So I hope you can hear me well. It's gonna go back in a few seconds.
Sorry, it seems that my screen is not shared anymore. That'll be just a second. There we go.
Okay. Thank you, Melissa. Sorry about the technical difficulties again. So yes, we will now focus on the ICT sector, and especially its exposition to transition risk. So we will define what transition risks are and in what way the ICT sector is exposed, and what is his impact on climate change. So first, it's important to realize that digital worlds have a strong impact on climate change due to its GHG emissions. It emits roughly 4% of worldwide GHG emissions. So those are numbers from studies from the SHIFT project and Green IT, which finds similar results, so roughly 4% of GHG emissions worldwide. So it's hard to understand if 4% is rather high or rather low. So to help you understand, we provide other metrics to understand the order of magnitude. So it's equivalent to air travel. So it's actually a bit less if we do not consider non-CO2 emissions, and a bit more if we consider, and air travel is a bit more if we consider non-CO2 emissions. If the digital world would be a country, it would be the 5th emitting country in the world. So just after China, USA, India, and Russia. So we are speaking territorial-based emission. And it's also the equivalent to a third of residential energy consumption. So meaning it's equivalent to a third of electric consumption in household and heating consumption in the household. So 4%, it's something non-marginal, it's significant. So that's why we started to focus on this sector in terms of carbon accounting and transition strategy. So to understand more easily the study and the results of the study, I first need to present you the ICT physical infrastructure. So it's composed of 3 main components: data centers, which you can see in the middle, networks on the bottom left, and connected devices, so end user equipment. So it can be laptops, smartphones, computer, but also like smart speaker, those kind of connected devices. So this infrastructure is physical. It emits a lot of emissions. And it's important to realize that the ICT sector is not dematerialized, it's not immaterial, it's not digital. It relies on a really physical infrastructure. And all the uses of allowed by digital services, so streaming, social media, online video games, online advertisement, all the software that you can think of, and the web content provider that you can think of, they rely on this really physical infrastructure, which emits a lot of emission. So in what way, where exactly, what are the main sources of emissions? It's the next slide. So here, if you consider the whole value chain of the ICT infrastructure, so you can see the ICT infrastructure is in the middle of the scheme. It's once again data centers, telecommunication networks, and connected electronic devices. it emits emission mostly during its production phase and its use phase. So during its production phase, it emits, so the production phase is defined as the extraction of raw materials needed for manufacturing components. So a lot of metals and rare metals. It also consists of manufacturing the components and transporting, delivering the components to the end of the value chain. So in the upstream value chain, so the production phase, it's mostly a consumption of fossil fuel and a bit of electricity consumption. And during the use phase, it's only electricity consumption. But electricity can come both from low carbon sources, such as renewable or nuclear energy, or from highly emittive sources, so from fossil fuel combustion. We do not consider the final phase of the ICT infrastructure, which is the end-of-life treatment of the product, because in terms of carbon emission, it's marginal compared to the production phase and the use phase. However, it still has a great impact on the environment and the biodiversity. And I will talk about it a bit at the end of the presentation. And in terms of repartition of distribution of emission between the production phase and the use phase, so the manufacturing and the use, it's mostly the use phase which emits the most, except for user equipment, where it's half-half. So why? It's because for networks and data centers, so you can see that the use phase is predominant. It's because they are continuously operating, so the use phase, and they last much longer. So the use phase is like much longer. And they are operated by professionals. And so they are less easily replaced than user equipment, where user equipment can be replaced even if they are not defectuous, even if they are still working, just because the user wants to buy a new equipment. So therefore, the emissions for user equipment comes both from manufacturing and the use phase. And for networks and data center, it's mostly the use phase. Okay, another and eventually the most important aspect of the emissions of the ICT sector, and why we did this methodology and we did this analysis, it's because the emissions are following a worrying trends, meaning that they are steadily increasing over the years. So if you look at the graph on the left, you can see the historical emission between 2013 and 2020. And on this period, the emissions has increased by 8% per year, which is a super sharp increase. So it's really worrying. If they keep increasing this way, emissions would be around 7 to 9%. ICT sector emissions would represent 7 to 9% of worldwide GHG emission. So it will almost double in 5 years. So it's a really sharp increase. The only scenario on the bottom where it doesn't increase this much is a scenario that encompasses energy sobriety measures. And we see that even with energy sobriety measures, the emissions keep increasing because the digital technology keep being more used by the society. And why those emissions are increasing is because we can observe, so on on the graph, you can see that the four lines represent the evolution of different indicators for the ICT sector. So the number of devices, including Internet of Things for the higher line, the number of users, the mass of the whole digital infrastructure, and the number of classic devices, smartphone, laptops, TV screen. The most important things to look at is the fact that the number of devices and the number of users are sharply increasing. So it explains the increase, it partly explains the increase in emissions. We can, I didn't put it on the slide, but we can also see that the revenue has a similar increase over this period, meaning that the overall growth of the infrastructure in terms of revenue or in terms of physical metrics is not actually decoupled from the growth in emissions, meaning that if we keep this business as usual scenario, even if the infrastructure keep growing, the emissions will keep growing also. This can be also explained because of rebound effect, which are an important aspect of the dynamic of the ICT sector. So rebound effects means that an improvement in energy efficiency is actually offset by an increase in users or by demultiplication of users. So it's happening a lot in the ICT sector. So for instance, we can if we think of the 5G. So the 5G actually allows to consume less energy for the same use from the same data throughput. However, the 5G allows to consume way more data, to handle way higher data volumes, and therefore it creates new users which consumes more data and therefore more energy. So the 5G would not actually help decreasing the emissions, but by creating new users will actually increase the emission. So therefore, what we are assessing with CIA and in Carbon4 Finance are the transition risks of the companies. So for us, the transition risk, we evaluate them by assessing the dependency of companies to fossil fuels. But it's important to have in mind how they would materialize for company how they would actually materialize. So first, a quick definition of transition risk. So it refers to all the potential risk of a transition towards a low carbon economy, meaning that if regulations are put in place to help transitioning towards a low carbon economy, will those regulations affect my company? So a disorderly transition of a company will translate in a higher risk. So you can we assess four types. We assess four types of risk. So first, regulations. The most important one for the ICT sector would be to be forced to digital sobriety. So legal warranty, period extended, repairability indexed, mandatory, data throughput limitation, etc. For the market risk, it would be a change in customer behaviors, meaning that customer would be more demanding of low carbon services that would not be compatible with a highly emissive sector. we can also note that raw material are subject to transition risk, and that the ICT infrastructure relies a lot on raw materials extraction, and on electricity as well, which is also subject to market risk, because electricity with highly volatile prices would translate into highly volatile prices to power the infrastructure. And one of the important risks also is in the reputation category. So an awakening of stakeholders, so both customers and shareholders, to a company being accused of inaction or greenwashing could jeopardize the company's activities. It could be also tougher to recruit people, etc., etc. So by assessing the impact of companies over climate change, we assess how strongly they rely on fossil fuels, and therefore how strongly they depend on fossil fuels, and therefore a high dependence on fossil fuels is translated into a high transition risk. So that's what we call the double materiality. So that's it for the sector's stakes. So now we'll focus on the CII methodology. So with first a quick general presentation, and then a focus on the CII methodology adapted to the ICT sector. So the CII methodology, as Noémie already mentioned, is rely on a bottom-up approach for corporate company, meaning it will go from physical through metrics to physical metrics to compute the emission of a company. It will not rely on statistical ratio. We assess emissions over the whole value chain, so scopes 1, 2, and 3. We also assess emission saving, meaning we assess also not just if the company is have an impact on climate change, but also is the company contributing to the low carbon transition. And we also have a forward-looking analysis, which is a qualitative analysis that will assess the strategy of the company to move towards the low carbon transition. For the ICT sector, we analyzed 67 companies, and we classify them into 6 different subsectors. So you can see them on the left. So there are telecommunication services, business-to-business software, business-to-customer software, computer and peripherals. So all the electronic equipment. We also include in this sector spare parts that will be a component of a final electronic devices. So, for instance, semiconductors that are made for electronic devices will be assessed with computer and peripherals. But semiconductors that are made for like solar panel won't be analyzed. So it's only the components of electronic equipment. We also assess consulting services and media in terms of web content host provider. And in terms of market capitalization, those 67 companies represented 11% of the world market cap in 2021, and 80% of the ICT sector market cap. So one of the first takeaway that we can have on this slide is that we see that media company represents 16% of the whole sample in terms of companies, but in terms of market cap, they represent 46%. It means that sectors which are at the end of the ICT value chain, so media, are capturing all the value creation of the sector because they are making the most, all the profits almost. And this can be explained because those sectors are services mostly, and they they do not have operational expenses because they do not operate the networks, or sometimes they operate data center, but sometimes they don't. So if they don't, it's even easier. And then don't have capital expensive also because for the same reason. Yes, that's what it's explained in this last sentence. So one of the key indicators, as you can imagine, of the CA methodology are the induced emissions. So we have different way of assessing induced emissions for the ICT sector. So first, the scope 2 and 2 emissions. So it's a rather classic approach. We take reported emission if we think they are relevant, meaning that we compare them with calculated emission from our ratio. So it can be calculated emission from energy consumption, from office life ratio, so mostly for media and software developer, or from monetary ratio. And it's in the type of ratio are given in terms of order of precision. So energy consumption will be more precise than a monetary ratio. For scope 3, there are two types of emission. I will explain them in this slide and go deeper in the first type, so the systemic emission, the one on the left, in the next slide. So what is important to realize is that usually for a bottom-up approach, we will use ratio based on the number of products, for instance. So if I manufacture 10 computers, I will multiply them by a ratio of ton of CO2 per computer and obtain my scope 3, my emissions. And I can have a ratio for my upstream scope 3 emission, for my downstream scope 3 emission, etc. For the ICT sector, it's really complicated to do so because there is a huge variety of products. And also, we wanted to distribute the emissions of the ICT infrastructure across all the actors of the ICT value chain. So from telecommunication servicing and computer and peripherals manufacturers to media and software. So therefore, we relied on the statistic approach to attribute emission. So we attribute the whole ICT sector's emission on the right to each of the company analyzed. Not like we distribute it evenly based on the value added of the company over the value added of the ICT sector, which are estimated by the EBITDA. So this way, we are sure that media and software company inherits from a part of the ICT infrastructure emissions. We also have another type of emissions, which are end markets emission, so customers emission. So this concerns only B2B businesses, so consulting and software mostly. And the logic is to say that for those companies, the risk also lies in their customers. So for instance, if I'm a software company and I'm selling only software to an oil and gas company, to oil and gas customers, then my transition risk will be high because the transition risk of my customer is high also. So focus on the first type of emission. So why do we compute systemic scope 3 emission? It's because, so first we want to allocate fairly emissions of the ICT infrastructure to each actor of the value chain. Also, we can observe that there is an interdependence of actors. So, for instance, if I'm a software developer, so I develop an app, I will need networks to have an internet connection. I will need a smartphone to have devices that supports my app. I will need media to have like content on my app. So basically, each actor relies on the services of other actors. So each actor should inherit a bit of the emissions of other actors. Another way to say it is that each actor is subject to any constraints that apply to the ICT physical infrastructure, because each actor is relying on the ICT infrastructure. Another reason why we computed the systemic Scope 3 emission is because we also lack of physical metrics to compute bottom-up emissions, because there is a huge diversity of products. So as I said, for computer and peripherals, we assess each type of components. So we would need an emission factor for each type of components, which is really hard. And for software, it would be even more complicated. And we also observe a lack of transparency of actors, meaning they do not disclose any physical metrics, maybe because there is a huge diversity of products, but also because it's not mandatory to disclose physical metrics. So it was complicated to compute bottom-up emissions. So we choose to compute statistical emission for Scope 3. But Scope 3 emissions are not impacting the CII rating. So because with systemic Scope 3 emission, it means that all actors have the same Scope 3 intensity, more or so. So they would have all the same rating if we base our rating on the Scope 3 intensity. So we chose to do the rating a bit differently. So as you may know, the CII overall rating is composed of 3 indicators: the past performance, the current performance, and the forward-looking performance. So the past performance is like how the company has improved its carbon performance over 5 years. So it's often how the company has improved its carbon intensity over 5 years. The current performance is how the company is performing compared to its industry peers in terms of carbon performance, so mostly in terms of carbon intensity. And the forward-looking performance is what is the strategy of the company to mitigate climate change and to mitigate its transition risk. So for the first 2 indicators, which are mostly intensity, as we lack physical metrics, those indicators are mostly systemic. So meaning every actor has the same rating, except for two types of actors: telecommunication services, where one of the main sources of emission is the energy consumption of the network. So therefore, to reflect the intensity of telecom, we created an indicator in Scope 1 and 2 per subscriber. So it's an indicator that we think reflects the carbon performance of the network. So we compared those intensity between each telecommunication services actors, and we also computed the evolution for each actor of this metric over 5 years. For consulting and B2B software, we rely on end market carbon performance. So for instance, if I took back my example, if I'm only sending software to oil and gas actors, they would be rating maybe 10, which is a bad rating in CII. So my current performance would be 10. And if if before I was selling software to, I don't know, train manufacturer, which has a better carbon performance, my carbon performance would have increased, badly increased over 5 years. So my past performance would have a bad rating. But those are exceptions, because most actors has a systemic risk for past and current. So to be able to differentiate the most actors, we put great effort in the forward-looking performance, so the qualitative analysis on company. So forward-looking performance is the analysis of the company's strategy. And we put all our weights all of the overall CI rating on the forward-looking performance. It's also because most of the work is to be done in the future, as you can see with the crazy dynamics of the ICT sector. Okay, so those are the weights of the forward-looking rating. I'm going to go a bit faster here because I want to go to the results, so you can easily see those explanations in our CI methodology guide. So basically, the forward-looking performance assess the company's strategy, the weights, the company's investment in terms of the low carbon investment, in terms of relevancy, and in terms of weight comparing overall investment of the companies. Its reduction target for Scope 1 and 2 emissions, its reduction target for Scope 3 emissions, and how well is the governance implicated in climate-related risk and opportunities for the strategy. We created a grid which is available in the publication to be able to classify which measures should be encouraged for ICT actors and which measures should be discouraged for the digital sobriety. So just to quickly on the previous slide, yeah, sorry, there are 3 types of measures where you can act on: producing the infrastructure in a greener way, so producing less and with low carbon materials, using the infrastructure more reasonably. So first, on the middle, decreasing the energy efficiency of usage, and on the right column, not creating new energy intensive usages. So let's go to the most interesting part, the outcomes of the campaign. So first, here is a graph presenting on the left the CI overall rating on the y-axis, and on the x-axis you have each type of actors. So you can see that ratings are fluctuating depending on the type of actors. So the average of the sample is at 9.4, which represents a rather slightly negative contribution to climate change mitigation. A bit of the company are between the 2 lines, meaning it's business as usual, and a lot of companies are ahead of the red line, above the red line, meaning it's they have a negative contribution to climate change mitigation. Yeah, so worst performing sectors are media and B2C software because most actors don't pay particular attention on climate change, or actually don't publish information on their climate change strategy. For telecoms, hardware, B2B software, ratings are rather spread or widely spread because some actors have understood and have undertook measures to decrease their transition risk. Others didn't start to act. Sorry. And consulting services are the best rated sector because most actors have started to implement business unit dedicated to climate change mitigation. Well, I'm going to skip this part because we don't have much time. For telecommunication services, if you look at the past performance, most actors fluctuate between -20 and +20%. Explanation on why actors are fluctuating is because either they manage to decrease their network's energy efficiency. The countries where they are operating decrease their electricity mix, so meaning the emissions related to energy consumption decreased, or because they sold or acquired networks in a country with more or less electricity intensive, carbon intensive electricity mix. For the present performance, as you can imagine, it strongly depends on the countries where your networks are located. So the better rated, the companies with the best ratings are French companies, because we have a very low carbon electricity mix. So Iliad and Bouygues Telecom have a good present performance, whereas Verizon Communication and Comcast, which are located in the US, have a rather bad present performance. For consulting services and B2B software, results were not that interesting, because most companies have the same rating in terms of present and past performance, not in terms of forward-looking performance. For the past performance, is because they haven't changed their end markets and their type of customers, meaning they are doing business statu quo in terms of business. And for the current performance, they have customers in all sectors, which represent the current economy, meaning they reflect plus 3.5 degrees Celsius increase by 2100. So it's a business as usual performance. For the forward-looking, it's the most interesting part for the results. If we analyze the strategy of companies, so it's the first criteria of the forward-looking performance, it's one of the worst performing criteria, meaning that most companies haven't undertook measures that we think are relevant for climate change mitigation. Because most companies focus on office life, which is not significant cost of emission, and many do not mention any risk. For scope 1 and 2, it's one of the better performing indicators, because half of the sample have relevant scope 1 and 2 targets, and half of the sample have not relevant scope 1 and 2 target, meaning they rely on carbon offsets. So it's mostly a company which have neutrality claims. We do not consider neutrality claims relevant. You can have explanation on the Carbon4 NZI methodology. And we do not consider renewable energy certificates relevant. We only consider power purchase agreements relevant for scope 1 and 2, for scope 2 decrease. For scope 3, it's also insufficient because most companies, especially media and B2C software, do not realize the length of their value chain, meaning they do not include emission from the ICT infrastructure in their scope 3 emissions. So they don't have targets on the relevant scope 3 category. And they also rely on neutrality claims, which are not relevant. For investment, they are insufficient also, either because they are marginal, they represent a small share of the company's overall investment, or because they are irrelevant, meaning they do not finance significant measures that will significantly reduce carbon emissions. So for the end of the presentation, it's important to quickly speak about the limit and most importantly the aspects that we did not cover with our methodology. So the first one, I already talked about it, is the recycling and end-of-life treatment of equipment. It's still important to talk about it because most of the equipment are either incinerated or buried in landfill, which cause air and soil pollution. And also those landfills are run by illegal channels with terrible social conditions. It's important to note that digital is an enabler of the consumer society, and we did not really take this into account, even though for the forward-looking strategy, we kind of took measures, some criteria kind of took this into account, but anyway, it's an enabler of the consumer society. And we also did not take into account physical risk because it's a focus on transition risk, but physical risk are much real for the ICT sector, especially those that apply to the ICT infrastructure. So it can jeopardize the supply of raw materials. So you might remember that there have been a shortage in semiconductors, which have impacted the whole ICT industry. So this is the conclusion. We'll go to the question quickly. The key takeaways are the ICT infrastructure has an unsustainable growth in terms of emissions, impossible decoupling between growth and emissions, systemic risk. All actors that rely on the ICT infrastructure are at risk and have an impact on climate. So there must be a systemic change. There is a huge diversity of products and a lack of transparency. Most actors neglect or see climate change as an opportunity, but not as a risk. And actors focus mostly on non-significant emissions.
Thank you so much, Charles. So we're going to go very quickly to the questions that we have time to address. The questions that you've asked in the chat, we do see them, even though the chat is disabled. Just so you know, first, the publication, the written version of the publication is available online on our website, and we will send you the slides of the presentation right after the webinar. And now we'll answer your question. Thank you for asking them. So first, there's a question about where do we include the GHG emissions linked to the software and digital services built upon ICT infrastructure?
In our methodology, they are included in the. So can you go back to the slide of the scope 3?
We're going to try to answer all the
questions. Yeah. So basically, we distribute all the ICT infrastructure. So this includes production and use phase of the ICT infrastructure to each actor of the value chain. For software, it's services. So there is no like a specific post in the GHG protocol that could encompass all the emissions of the ICT infrastructure, but it's still emissions that should be inherited by software company, as they do rely on the ICT infrastructure a lot. So it's important to assess them. Yeah.
Thank you. Francois asked about automation. What about robots, automation components, and thus companies producing the kind of software? Can our methodology be applied to these kind of companies?
So to the software, yes. To robots, we are only assessing components that are part of the ICT infrastructure. So meaning they have to be connected to a global network. So no, we won't be assessing robots. We have another methodology for those kind of equipment.
Thank you. We have a question about avoided emissions. We're asked how they are assessed.
So for this sector, we do not assess avoided emission because we lack a specific scenario for this sector. So avoided emissions are emissions that are saved compared to a scenario, and we don't have it for the ICT sector, so we do not compute it. However, we kind of take them into account in the forward-looking strategy, because avoided emissions are basically emissions linked to the contributions to climate change mitigation, and we assess qualitative climate change contribution measures in the forward-looking strategy.
So this is kind of a broad question. If you want to take a chance, Charles, we have a question from Daisy. Could you please share with us the best practices for each subsector of ICT? I don't know if this is something that you can find maybe more in the written.
Yeah, so it's definitely on the grid that we spent maybe less than 10 seconds on it. So I'm sorry about it. But you can find it in the publication, in the public version of the publication. So there is a grid with all the recommendation of Carbon4 for digital sobriety. So basically, there are two types of measure: green for IT, meaning how to decarbonize the ICT infrastructure, and green by IT, meaning how the digital world can help decarbonize the economy.
Is it possible to have the link of the public version? We will send you actually with the email, the follow-up email from the webinar. I think that's it in terms of timing. I'm sorry, I wish we had more time to answer questions, but we did have a lot to share as the ICT campaign was full of very, very interesting conclusions. Thank you very much for attending this webinar. So as I said, we will send you the slides as well as the link to the publication. We hope that you enjoyed our webinar, and we'll see you in a couple of weeks, or more than a couple of weeks, in a few weeks, for the highlights of the next Carbon4 Finance campaigns. Have a good day.
Thank you.